his Bridge Loan to Nowhere online at nation.com. We're also joined in Boston by Bruce Marks, founder and CEO of NACA, the Neighborhood Assistance Corporation of America. Bruce Marks, let's talk about what needs to be done. The last time I saw you, you were here in New York, headed off to a protest, what, at Citigroup, Citibank?
Yes, and then, you know, and we've been doing a lot more protests since then, and we were just in Senator Reid's office with over 150 people saying that this bailout should not happen. We should not be talking about nibbling around the edges, making it a little bit better. I mean, CEO pay, that's a red herring. That's not a relevant issue here. The fact of the matter is this thing should be killed. It should not happen at all. It does nothing, Amy, for the homeowners. And what we have to say to Congress, Amy, is we have to say it's the foreclosure stupid. Just like Bill Clinton said to the first George Bush, is the economy stupid? We have to say to this Congress, it's the foreclosure stupid. And they have to do three things. Do a moratorium on foreclosures, stop the interest rate increases, and restructure loans to make them affordable. That's it, without $1 of taxpayer money.
Do you agree with that, Rob Johnson? I
think that we should do those things. The Homeowner Loan Corporation, which the Roosevelt administration initiated, would be, how do we say, the vehicle to answer many of the things that Bruce is asking for. But I think, in addition, we do have to restructure Wall Street. I think the plumbing of our society, to use the analogy of medicine, it's like the blood has stopped flowing. And we need to clean up the banking sector so the blood can resume flowing and nourish the organs. But clearly a necessary dimension of that is the foreclosure relief and the rescheduling of loans and reduction of the burden on the population. Absolutely.
What else do you think needs to be done, Rob Johnson?
I think at this point we have to structure the support in a way that brings money back to the taxpayers when the financial sector is healthy. I referred to the Buffett analogy before, and I think that's very important. Third thing I think is we need regulatory reform of the first order, and generally that's kind of hard to get after you've given people the money. So I might tranche the money. First part goes out, second part goes out, contingent upon regulatory reform. Put a little pressure on it.
But Rob, but that is, you're saying to the American taxpayer who are stressed now, who have tight budgets, you're saying to them $700 billion. If we give Wall Street $700 billion, how can you conceivably encourage working people to give that money, $1 of that money, when people are so tight? And these are the very institutions. How are you going to stand up and say, we justify giving Goldman Sachs billions of dollars when 2 years ago they paid $16 billion in bonuses to their executives? How can you say that to the American people? The fact of the matter is we should kill this bill. It should not happen at all. That, you know, you got to focus. If you focus on the foreclosures, if you focus on that, what does that do? That's good for the homeowners. That's good for the community. That's good for the investors. It's good for the servicers because some return is better than no return. And Paulson, let's go back in history a little bit. Paulson says the sky is falling. We have to bail out Bear Stearns, $30 billion. The sky is falling. We have to bail out Fannie and Freddie, $200 billion. The sky is falling. We have to bail out AIG, $85 billion. Well, at some point, we got to say, when you have a track record of failure, well, then we got to say, maybe the sky is not falling. Maybe we need to let things play itself out there. And that's what we have to do. And you know what, Rob, and you know what, Amy, when you have out there, he owns Fannie Mae. He owns Freddie Mac. And if you say out there to Fannie and Freddie, we want you to set the standard in helping homeowners. We want you to do the Sheila Bair standard, head of the FDIC. When she took over IndyMac, what did she do? Moratorium on foreclosures, restructuring mortgages. That has worked. When Paulson took over Fannie and Freddie, what did he do? Absolutely nothing. He did not stop the foreclosures. He did not force the restructuring of mortgages. And we know it works because at NACA, we're a nonprofit, but we have over 40 offices out there. We are restructuring mortgages to make them affordable by reducing interest rate to 5% and less. We know that works. Obviously, it has to be done on a much, much larger scale. Paulson can do that. Why should we trust him with $700 billion of our money? There's nothing you can do to this bill to make it palatable to the American people. And that's why all the establishment and the economists that say we should do it, but you know what? The American people are smarter than that, and they're saying, hell no, we're going to stop this thing. Because if I was a congressman, if I was a senator, I'd be scared to death to go to my district and say I supported this corporate bailout. It's an outrage, and we got to call it for what it is.
Rob Johnson.
Many different thoughts in your statement. Number one, I think the American people should be despondent. They should be angry. They should feel abused, and they should feel offended. Number two, I don't trust Hank Paulson with $700 billion, and I think it's right not to. And I think the bill is very weak. As Dennis Kucinich said yesterday, there's too many mays and not enough shalls. Thirdly, I think that the credit system is much better. I always say the resolutions have been much better handled by Sheila Bair and the FDIC thus far than by Hank Paulson and the Treasury and the GSE. But I do believe that this avalanche of leverage, which is an outgrowth of the history that we've had, really going back to Ronald Reagan and the unbuckling of regulations and other things, is a calamity that can take the population down with it. And that's the only reason I would say some form of restructuring that penalizes Wall Street executives is necessary at this time. I do not think this is a synthetic crisis. I believe this is a real crisis.
But let's not talk about CEO pay, because remember, all those CEOs who have ripped off the American people and the stockholders as well of their companies are gone. I mean, they're gone. They've already walked with their hundreds of millions of dollars. They're gone. But how can we be out there? We gave a blank check to this administration 5 years ago, and we're still in Iraq. And then people want to say, let's give another blank check, and American people are much smarter than that. I mean, we need everybody to call their congressman. If people continue to call their congressman, because over 90% of the phone calls out there are saying, don't do it.
So, Bruce Marks, you're saying don't do anything. What would that mean?
Don't do anything. That means that if you focus on the foreclosures, stop the hemorrhaging out there. Let the markets play it out. Because, of course, the markets are going to go down. They're going to go down today. Because when you say this to the markets, we're going to give you $700 billion of American taxpayer money. It's like giving a child, who's 16, a brand new BMW and say, this is great, and then you take it away from them. Of course the markets get pissed, and they'll pout for a while, and they'll go down for a while, but they'll adjust, and they'll deal with it. So the fact of the matter is, let them deal with it.
What about the fact that a number of economists say that if you did this, if you didn't have a bailout, that would cause mass bank failures that would devastate the economy? The global economy.
Well, the problem is, with all due respect to the economists have been saying this is a cycle. Well, for people, 8 years ago, I testified in Congress, and I said that if you allow Fannie or Freddie and the industry to get into subprime lending, it will be an economic catastrophe, and the taxpayer will be forced to bail them out. Well, 8 years ago, if I knew that, the industry knew that. The problem when you deal with economists is they don't know the mortgage business out there. And so they're thinking about this as a cycle. This is not a cycle. You have to focus on the mortgage business, because that's the fundamental problem out there. And if you deal with the mortgages, you stop the foreclosures, you help the 10 million people and more who are at risk of foreclosures, that's dealing with the underlying issue. And that's what we have to do. Let's not deal with the symptoms.
What about that?
Let's deal with the underlying issue.
Would that solve it?
Well, I think there are a number of things that are necessary to solve. First of all, the structure of our representation in Washington is far too dependent on money and not dependent enough on people. So someone with good ideas like Bruce doesn't get enough traction because the Wall Street guys can buy things out from under. And so there are many structural reforms that are necessary here. Clearly, the foreclosure relief, restructuring, and refinancing the loans on the model of the Homeowners Loan Corporation is a necessary dimension. And I think right now, with Pelosi's letting this vote go down, is an opportunity for people to rise up all over this country when they have this gift, which is in 5 weeks, votes count more than money. And they can step forward right now and force a change in this bill and in some sense force the Democrats to change what they offer to the American people and maybe constitute what you might call a changing of the guard and a turning point in the way our society sets its priorities.
I want to play for you, Bruce, just one second. I want to play a clip of Dennis Kucinich. We spoke to him yesterday, right? The former Democratic presidential candidate, the Ohio Congressman, who is voting no on the bailout.
I'll tell you something that we were told in our caucus. We were told that that our presidential candidate, when the negotiations started at the White House, said that he didn't want this in this bill. Now that's what we were told.
You were told that Barack Obama did not want this in the bill.
That they didn't want the bankruptcy provisions in the bill. Now, that's what we were told, and I don't understand why he would say that if he did say that. And I think that there is the fact that we didn't put bankruptcy provisions